We're still tracking this market sell-off and metals under pressure again today, but Bitcoin has been higher, it's been lower, and currently very small moves, only 0.2 down. But don't forget, we've been tracking around a 10-month low. Look at how the crypto firms have been faring too in pre-market, and don't forget they've been absolutely smashed in recent months thanks to the drop we've seen in the Bitcoin and the crypto space. Strategy has seen down 7.6%, Coinbase 4.7% down, Circle Internet down 3.8%, and Galaxy 7.6%.
Michael Saylor is the ultimate. I was going to say his posts on X are nuts, but
yes,
that's not fair to nuts. No, they are quite extraordinary anyway, and it's kind of almost, I don't know, it's almost like kind of messianic, if that's not wrong to say. Anyway, my point is, Michael Saylor is the original DAC, digital asset currency chap, and he is the biggest holder, biggest advocate on the planet of crypto. He has been buying more, but he's now underwater. He owns hundreds of thousands, more than most people out there, apart from the old government. El Salvador. I think he owns more than El Salvador. But the fact is he's underwater now.
Yeah.
So this is getting tight for him.
Well, he's not the only one. I mean, I spent a lot of time with Brian Armstrong over at
but that's interesting.
Coinbase.
That's about volume rather than holding the position.
It's about a lot of things. I think let's get to John Blank, Chief Equity Strategist at Zacks. John, we've just sort of set the scene there around Bitcoin. What do you think? Or what's the outlook look like?
Karen, generally speaking, a Bitcoin winter is 12 to 18 months long. And these are well understood technical features. So at 76,000 from 125,000, which was the peak, we can get to 40,000. 40,000. So if we get to this Rubicon, as Steve spoke to, which is basically being called out by Saylor because of his positions, when does the forced selling and the liquidations happen to take us to 40,000? We can get there very quickly, or more likely we're going to get there over the next 6 to 8 months.
But John, we've got a crypto-friendly president. We've got a president that is friendly for all sorts of digital coin, and this is why the market has been unwilling to bet against that. They've been cautious, even though we've had a huge downward draft here, they're still cautious that friendly policies from the Trump administration could be forthcoming. Would you bank against that? Well,
I just think, everything's tied to the Stablecoin Act, and the Stablecoin Act is still playing out. So, the president generally doesn't like actual policy and getting involved in it. He likes emergency orders. So, the problem here is the crypto guys bet on the wrong guy, who has to put a stable framework into place, which is the Stablecoin Act, which is playing out.
But this is still a negotiation. I was talking to Brian Armstrong about this the other day. They want some sort of reward when it comes to the stablecoin, which would take on and challenge the deposits that you've seen at banks. So this is still up for grabs at this stage.
Well, absolutely. I mean, the whole stablecoin thing is not stable. This is the basic problem. I mean, they're trying to create demand. They tried through the ETFs, now they're trying through the stablecoin. And this is the other problem here is how long is that game played? That played out for years. And there's also a generational issue. People tired of this whole trade, tired of it because COVID's over, tired of it because there's other Coinbase things to do. I mean, that speaks to Robinhood outside of Coinbase, right? Robinhood's doing great, Coinbase not so much. So we're in this other thing, which is it stale to be in Bitcoin, basically?
Do you agree with some of the other commentary that's been around this? I'm thinking the global market strategist at Marex, who said that what we're seeing is an asset in search of a valuation model. There's no clear consensus on what actually drives the price of this. Does that reflect your view, or do you disagree with that?
Well, man, there's a thesis that I think should get more airtime in financial markets, which is called the inelastic financial markets hypothesis, which is prices in financial markets are inelastic. So you put a lot of demand in, the price goes up dramatically more than it should have. So this is really inelastic financial markets hypothesis is crypto. You talk it up, you pump it up, and you create new sources of demand, and the price is inelastic and it explodes, right? But it explodes up and down. So when the market gets unliquid, it's going to multiply much faster and pull away. So I think the other thing here is, inefficient and efficient markets have gone towards inefficient markets because of this inelasticity of people just chasing the same stuff, chasing too many trades, too few trades.
And do you see that as being a specific problem to certain types of crypto, or do you think it's a broader issue that would call into question the wisdom of central banks holding strategic reserves in cryptos?
Yeah, I think so. I mean, getting the central bank in on these types of trades with total inelastic markets, that would just be this massive surge in liquidity, massive surge in prices, and that would be, take it another level to higher. So, this is why they're talking to the president. This is why he got on his side, because they know this story. They know they need another source of demand, and they need a big one.
A couple of points, Karen. You said that Trump's a fan of crypto, and obviously, I think I understand that him and his family are involved, but the Trump meme coin has fallen over 90% in the last year. I just saw the last print, 4.1, I think it is. It got hit $75 at its high. John, come back to us on this. I've just told the .com to have a look at your $40,000 comment, so I need some more flesh on it so they can make a bit of copy for you. Why is 40,000 the level?
Well, if you take the highs out of the last cycles of tops of the Bitcoin and the lows, you're going to get a kind of a megaphone pattern, right? And so this is just calling the extension of that chart to the 40,000 for this move. That's what I'm saying.
On the way down, sorry, we started off by talking to Mr. Saylor and what have you, and the digital asset currency people. That's going to wipe a load of them out.
Absolutely. So the question is, who's behind all of his liquidity? What banks? What lending? What kind of stops does he have in place in his mind? And how does he play this out? Because he's going to talk one game and play another, right? He's a trader. Yeah. So I've noticed many traders, work with a lot of them in the company I'm in. They'll say one thing, but if the market turns against them 3 days later, they're doing a different trade, for sure.
Got it. Yeah, I concur with that from the traders I know. Lovely to see you, sir. Thank you for joining us around the set. Nice to see you. How long are you over here for?
Just another 4 days.
Oh, right. Well, enjoy the rain. John Blank, Chief Equities. It's been awful. John Blank, Chief Equity Strategist at Zacks. Ben.